roll. Okay. Hi, I'm today's moderator for the AI Invest Forum. I'm Uly Su. I'm the venture partner of Addin VC. So today we invite different kind of segment investor here, so they can like better introduce their strategy. And this is AI probably bring the huge revolution here. So probably they can show, they couldn't tell us like which stock they should buy, right? They couldn't do that, but they can show their strategy. They can show like how they see the market right now. So first of all, I would like to ask Lei to self-introduce yourself. So Kai, please.
Thank you. Thank you, Uly. My name is Kai Chen. I'm the CEO and founder of OceanIQ Capital. We manage about 200 million. It's a wealth management firm that specializes in venture capital. We deployed capital into about 20 different venture capital, private debt, private credit fund, and private equity, as well as making direct investments into startups. In 2016, we did a data preparation investment startup, and then in 17 and 18, it's in autonomous driving. So those were the AI companies back in the days before generative AI. I also have a second role, which is I'm the general partner of Silicon Catalyst Ventures. And Silicon Catalyst is the world's largest semiconductor incubator. We have incubated over 100 semiconductor startups with total market value of over $2 billion. And we currently have a new venture fund of about 20 million that we're deploying into pre-seed and seed stage semiconductor startups. And we already invested into a couple of Taiwan companies. Look forward to sharing more about both the family office allocation side into AI, as well as our semiconductor funds allocation into AI.
Yeah, thank you, Kai. Also, the other speaker is Owen. Owen is the partner of the Dalton investment. So Owen, please.
Hi, everyone. Hi, everyone. My name is Owen Huang. I'm currently partner and a portfolio manager at Dalton Investment. We call ourselves a hedge fund because we only invest in public companies. That means a company already finishes IPO and everyone can purchase it in the stock market. Currently, my company manages around over $4 billion across the United States, Japan, Asia, including Taiwan and India. My company's investment style is more like a value investing. So it's like Warren Buffett style. So we tend to invest in a company and hold the company for, in average, like 5 years. So compared to most of the hedge fund, you can imagine they do more short-term trading to manage the volatility. My company, our investment style is more long-term. If you check my portfolio, I have a company I invest since 2016. So it's already 8 years. I also have a second role. I'm also a classical music composer. So if you want to know more about my music, then we have a booth. We can discuss about investment ideas and enjoy my music.
Yep. Cool. Okay. Thank you. So now everybody, after understanding their background, you can understand that I'm near the dreamer, the one who have dream will visit VC, but they are more like the show me the money side. Right. So if you want to show me the money, you will visit these two guys. So first question, we do have yes, no signboard over here because today you won't see the presidential debate, debate, but they have different opinions when we discuss. So probably they will show yes and no from different guys. So the first question I would have is is there an upper limit to the demand of the AI computing power? Because, everybody will see a lots of AI potentially churning or potentially AI power needs. But some of the, family medias or some of the research institute, they also claim that there is already an upper limit over there. So is there any upper limit over here? Yes or no? No. Oh, wait. Yes or no?
Yes.
This means yes, right? Okay. So we start from Owens.
Okay, I would maybe use more philosophy way to think about this. If we only use 5 to 10% of our brand, do we want to use it more? Like improve to 15 to 20% or even more? So in this way, the upper limit of computing power, I think before we achieve AGI, I don't think there's a concern on the ceiling of the computing power. And if I want to divide the current market concern on maybe the demand of AI is not so strong, then we need to first define what is the demand. I will separate AI demand in 3 categories. The first one is AI demand in CSP, so-called cloud service providers. That means AWS, Google, and Microsoft. The demand to list the GPU from all these CSP is actually very strong. As Nvidia showed in their official presentation, all these CSP, they spend $1 in Nvidia's GPU, they can make $5 return in 4 years. So for sure, the demand for CSP is so good. And the second demand is enterprise or software as a service company who want to build their own AI and maybe monetize their AI. I think the return of this category a little bit concerned because if every software company spend money on AI and then all these software services has AI function, it sounds like think about these situations. In a movie theater, and you have a lot of audience, right? And the first row of the audience, they stand up and cover part of the screen of the movie. And the second row need to stand up. And then in the end, all the audience stand up. But after 2 hours, you still enjoy the same movie, right? So you don't have more enjoyment because stand up. It's similar to what happened in the software sector. And the last category is demand for consumer electronics product. For example, AI computer, AI smartphone. I think this demand may be disappointed because think about that, AI computer, AI desktop. What is AI desktop? I think if any desktop or laptop, they have Nvidia GPU and they can connect to Nvidia's NIM or any software service, then it's already an AI laptop or desktop. We don't need to create another category and put so-called NPU to drive the demand. And for AI smartphone, if you already download your apps from ChatGPT, OpenAI, then it's already an AI smartphone. You actually don't need to upgrade your smartphone to have all these AI functions. So demand for CSP, very good. Enterprise software sector, not so sure. But demand for consumer electronics may be disappointed.
Okay. Wow. So Kai, any addressing?
Yeah, I just like to add that I raised yes and no because I am definitely not qualified to answer these questions. There's so many different machine learning PhDs and experts in the audience. But I would like to share that I saw that OpenAI has expected to have 4.5 billion in revenue this year, but they're expected to lose 5 billion. So I think Sam Altman believes that there's just no limit to the upper bound of how to stay at the bleeding edge of computing, and he's willing to spend as much as possible to be at that bleeding edge. The concern that I have would be that I heard from a speaker at Stanford just this week about how I think within the next 5 to 10 years, the energy consumption of generative AI and large language model would be about 10% or would exceed 10% of the global energy consumption, which is just completely unsustainable. So I think that could be kind of the upper limit on how to solve the energy consumption problem.
Cool. So I would like to push the second question. So the second question will push a little bit. It's about Nvidia. I mean, Nvidia right now in the market is kind of monopoly right now for the AI chips. So I would like to ask two of our speakers today, do you see any like potential also the upper limit or for Nvidia, will they still maintain their monopoly in the market, or it's probably you can see there's a lot of the future and you still want to go on in the Nvidia?
So yes, it's a monopoly.
Yes.
Yes.
Please. No. Okay. So, yeah, Kai, you can go first.
Actually, I prefer Owen goes first.
Okay.
He's really the expert.
Oh, okay.
Yeah. As you know, my name is Owen Swang, and we share the same family name. So
That's the reason you're back here.
I have a strong bias to, Nvidia. Yeah.
Okay. Seriously?
Okay, so be more professional. To maintain the monopoly, we can think Nvidia's competency in hardware and software. Almost all the AI engineers, they use Nvidia's CUDA. And the CUDA has registered user about 5 million. Then if you want to use CUDA, then for sure you will use Nvidia's GPU, and then you need to borrow or purchase the GPU in a very expensive price. But if you don't want to use CUDA, you use some other open source solution, I think the ecosystem is not ready. So in software side, it sounds like all the AI engineers, they must use CUDA. And in the hardware side, if we compare chip by chip, for sure, NVIDIA's H series or the next generation Blackwell, the performance is very good. But if we look at the system level, then only NVIDIA and maybe Google can build out AI cluster. That means they can build out the chip-to-chip communications through NVLink. So NVIDIA can build an AI cluster with connect 200, 300 GPUs directly. That's something AMD or Intel or other chips maker cannot do it. And if we look at the entire system level rather than chip level or networking, I think right now only NVIDIA has the capability to build the entire rack of the data center. That means include all the storage, networking, everything. And even connect two racks together, so-called GB200 and B72. Yeah, so my conclusion is no matter from software side or hardware side, I think NVIDIA's monopoly position will continue for a while.
Okay, thank you, Owens. And Kai?
Yeah, it's a little easier to go second. I do not have a background in tech, so my background is in investments and allocating capital. Of the 5 general partners at Silicon Catalyst Venture, 3 of them have over 30 years of experience in semiconductor industry, including one of them used to run the largest fab as one of the largest fab as CEO. Our thinking is that semiconductor industry is very cyclical. It costs billions to tens of billions to build a fab, and it costs tens of millions to hundreds of millions to build a good chip. And therefore, in a situation, and it happens very frequently that there will be a supply and demand imbalance. Basically, that's what's happening right now with Nvidia, where a GPU chip is $40,000, about the same price as a Tesla. And that is just a pure economic-driven supply and demand imbalance. And we do believe that over the long term, it's very hard to be sustainable. And even the medium term is hard to be sustainable. There's a lot of competition. And that's why we're betting a lot of new semiconductor startups.
Yeah, this makes sense, different strategy. So that's very good.
I want to say something.
Yes, please.
Venture capitalist Kai's perspective and the hedge fund is very different. And usually when you want to make money from the market, you cannot follow the consensus. So if I have yes and he has no, that means maybe there's the opportunity to make money.
Oh, very good conclusion, like it. Okay, yeah, you have the space over there, right? So that's why we bring to next question. Because you guys have some very, very different background. So as an investor, what your strategy for the AI related investment? So
Sure, I can go first this time. So as a wealth management firm and family office, we invested in different AI startups ranging from autonomous driving back in 17, 18. And now we believe that perhaps one of these large language and foundation models could be $1 trillion companies, just like one of these very large tech companies. So we're also investing in the likes of Anthropic and evaluating the likes of OpenAI. These are obviously two very big now, so we use SPVs to invest into these companies to try to get allocation from VCs and family offices. And then on the public side, I do believe that there's huge opportunities to invest in AI through the public markets. Just using Tesla as an example, it has, I think, over 1 billion full self-driving miles, much more than the best autonomous driving startup, Waymo. So I think the ability for the big tech, the type of Magnificent Seven companies to collect all these data and train their models is very superior.
Okay. Owens?
Okay. I'm thinking maybe a month ago when Meta has its earning call, and Mark Zuckerberg said we need more than 10 times computing power next year. Means we need to do a lot of capex. Then how to achieve this 10 times? By more engineering thinking. So actually, achieve this 10 times in the process, and then you will find a lot of investment opportunity, right? So to achieve this 10 times, then first, from the chip level, you need node migration. That means we need TSMC, and only TSMC can do that. And so TSMC maybe can help all the chips double their computing power by each node migration. And then we need faster networking. Front-end networking 400G to 800G, back-end networking, maybe more NVLink, bigger AI cluster. And then maybe we need a larger memory, which is high bandwidth memories in each AI chips. So that means we may need more memory supply from HK Hynix, Samsung, and Micron. So I will use this way to think about my investment strategy for the next 1 to 2 years.
Okay, cool. Very, very different because you have different background, different segment as it is way. So very different. So my next question would be, so have you used AI to assist you guys in your investment, for example, like evaluation or daily operations? Any tools?
As a hedge fund manager, we use Bloomberg a lot. And Bloomberg this year, they have an AI function to help us quickly digest all the earning transcript. So we don't actually usually before this AI function, we may need to hire a junior analyst to help us to do some summary and a note. But I take a look on all this Bloomberg AI function is pretty awesome. So we can receive all the information, digest all this information in a very efficient way. That's the first. And second, as a portfolio manager, I need to regularly publish my newsletter. And I think the newsletter writing, ChatGPT help a lot. That's for sure.
Yeah, true.
Yeah, I also use ChatGPT to ask some tax questions, pretty complicated tax questions that I would ask a CPA historically. And I feel like the ChatGPT gave really good answers, examples, illustrations, pretty amazing. But our usage of this type of tool is still very limited. I would like to, however, share that one of our portfolio company told me that it's a software AI company. They used to have 50 software engineers. Now they only have 25 because they could use Copilot to reduce the need for junior software engineers. So I thought that was amazing. So that's a big cut of their burn rate. So they could do a lot more with a lot fewer people.
Okay. Talk to AI is easier to talk to my CPA. That's true. Yeah. Okay.
But I think AI is not easy to make investment decision through AI.
Even for hedge fund?
Yes. Because my company is more fundamental research, value investing. But for some algorithm hedge fund, maybe they can use AI. Because in our investment process, we must meet the management team. And I don't think management team want to talk to AI, right? So we need to do that for the qualitative evaluation on the management team to decide if you want to invest in this company in like a 5 years horizon. I think for VC as well, you need to meet the management team to know the quality of the founder, right? Yes.
Okay, cool. So I would like to address the same question as my third question. That would be, could you share your plan more about structure your future investment in AI related?
Sure. I'll give two venture capital fund strategies that we're deploying. One is obviously the Silicon Catalyst Ventures. Historically, over the last 20 years, semiconductor and deep tech are very underinvested by VCs. The reason for that is it's very easy to bootstrap a software company and find product market fit. But for a semiconductor company to tape out a chip, it just takes tens of millions, and just to have a product even. So it's very historically underinvested. Silicon Catalyst, the incubator, solved this problem by convincing TSMC and Synopsys and about 20 other public companies to provide these free shuttle run and software for semiconductor startups. So they're able to get these startups kind of started with a lot of these in-kind contribution from public companies. We believe these type of startups are very underinvested. Some of them have tens of millions from Department of Energy, Department of Defense as non-dilutive grants. A number of them spin out from research labs in major universities. And they're priced at very low valuation compared with software companies. In addition, we also see that right now with the likes of Nvidia, Qualcomm, et cetera, these are trillion-dollar companies. They all have CVC, corporate VC arm, that could support a lot of these startups as they raise Series A and Series B. So we believe that the next decade is a great opportunity for hardware investments.
Hardware investment, not like AI application.
And these hardware investment has a lot to do with AI and generative AI because there's optical switches that connects the data centers. There's startups that focus on power consumption. How do you reduce power consumption in data centers? And there's also IoT. How do you deploy AI on the edge in the space with SpaceX, et cetera? So there's a lot of applications.
Application as well. Okay, cool. Owens?
Okay. If I review my experience in the past maybe 15 years to research the technology supply chain in US and also Asia, for sure include all the Taiwanese company in the supply chain. We research a lot about iPhone supply chain to know each generation of iPhone who gain the component maker may gain market share or lose market share. But in the end, it looks like if you want to invest, Apple make most of the money, right? So think about the AI supply chain. Who is the Apple of AI supply chain? Then this company may make most of the money. And when Jensen Huang mentioned iPhone moment February last year in Berkeley the conference.
Yeah.
What is the meaning of iPhone moment for the AI moment, or the AI revolution. And I use my experience from the research of the Asia supply chain. In the beginning of the iPhone production, maybe 2008, a lot of Taiwanese company, they joined the Apple supply chain, providing touch panel, providing very good lens like Lagan, and they make a very good momentum on their revenue growth. But several years later, Apple find the Chinese supplier to compete with Taiwanese suppliers, and then cut all the price of the supply chain. Then supply chain can only make a reasonable margin if they join the Apple supply chain. Of course, the volume is huge, and Apple iPhone almost guarantee you will have the shipment, certain amount of shipment every year. Mm-hmm. But compared to iPhone supply chain, this time AI supply chain, this time most of the suppliers are based in Taiwan, and almost no competition from China, because data center is kind of a national security issue. And since 2018 and 19, there's a Bloomberg news mention Chinese spy chips in U.S. data center server. Since that, I think all these data center components are quite sensitive if they manufacture in China or a non-China region. And this AI supply chain competition from Korea and Japan, not so much. Japanese company mostly they provide semiconductor equipment to Taiwanese supply chain. And Korean so far, their strength is only HBM, which is high bandwidth memory. So I would say the iPhone moment of AI revolution is actually Taiwan moment. So investment opportunity, then we need to study, research a lot about Taiwanese hardware company in the supply chain who can benefit a lot from this AI revolution.
I see. So I would like to, adding something in this section, because we probably can go further to discuss, because we will try to, as a VC guys, we will try to segment different kind of AI startup. We will say AI application, which probably in a lot of different fields, like ChatGPT is one of, AI assistant, all kind of assistant over there. And then the second layer is LLM, right? And the fundamental one is more like data related. So actually it's two questions. One question is like, in your perspective, which layer is your most interesting and you feel like there's the huge potential over there? It's the first question. And second question, seems like the Taiwan Tech Summit, right? So it's for most, like a lot of our attendees is Taiwanese. So if you are a Taiwanese startup, do you have any suggestion for them, or you suggest they should focus on AI application, LLM, or AI data layer? Yeah, so actually two questions. Who should be first?
I'll just answer the second question. As an incubator, we've been around for Silicon Catalyst for I think 8-9 years, and you would think that Taiwan being the semiconductor island of the world, you would see a lot of startups from Taiwan. We actually could count the startups from Taiwan with a single hand. Very, very few applicants. The reason for that is the most talented engineers, entrepreneurs in Taiwan are all working for TSMC. There's actually
it's good and bad. Yeah, it's
not enough people that are willing to take the risk of launching their startup from Taiwan. So I definitely encourage, and I think that's obviously changing. And I look forward to seeing more Taiwanese entrepreneurs from Taiwan.
Mm-hmm.
So 3 layers: application,
LLM, and data related. Yeah. Software, hardware. I mean, it's all okay. So.
Okay. I think in my perspective, for investing in the public market, I would avoid LLM. Because you can see when OpenAI announced a new ChatGPT and others like Google Gemini or Anthropic, they can catch up very quick. So it looks like any companies who want to build LLM, if they spend enough money, and spend enough money in Nvidia stuff, then you can build out LLM. And actually, Nvidia's software service can help you to build your own customized LLM. This one called AI Foundry. So it looks like going forward, LLM will become more like a commodity. But you need enough data to train the LLM. And if the data in the world is not enough, then you can create the data, synthetic data, to train the LLM. Then who can create the synthetic data? Maybe we need use maybe Nvidia's Omniverse to do more synthetic data. That's possible.
Yes, possible.
And yes, so avoid LLM. Who own the data, maybe who can build better LLM. And who has better data and the LLM may have a better application. And also who own the user's channel, distribution channel. For example, Apple may also benefit a lot from this AI revolution, although they don't have LLM.
I see. Okay. Because just as my beginning, I'm more, okay, thank you. Because I'm more near the entrepreneur, more near venture capital, more near I have a dream, this side. So I also have my few questions as well. So for example, did you see any huge opportunity in AI data or AI application layer? If we try to segment the kind of startup. So did you see more potential in data layer or the application layer for startups specifically?
Yeah, so I think for access into private companies and startups, a lot of time is about access. How do you get access to the best companies? And right now, we're seeing that in venture capital as a whole, about 50% of venture capital money are going to AI and generative AI application companies. So all the top VCs are investing in application AI. So the question is like, how do you get into these type of startups? And we found kind of a fund that basically help these top AI startups recruit engineers. They build a community on recruitment, and they were able to get allocations into companies that are backed by Sequoia, Andreessen, Greylock, etc. So that's one way that we're accessing these application companies or AI application company. But it's more about access than about us being being able to determine which one's going to work out. That we do not know.
Cool.
Yeah, I forgot to answer your previous question on my suggestion.
Yes, please.
Startup, right?
Yeah. You can combine together.
Yeah. For startup, I hope you can IPO as soon as possible, so I can invest in your company. Okay. I cannot invest in startup. But after IPO, I can invest.
Okay.
And your question
is about AI application. Do you see like huge market potential in AI application or the data layer for the coming, 3-5 years? But it's more startup side, so yeah.
As a fund managers, when we do invest in the investment in the public market, before thinking about upside, we usually think about the downside first.
Yeah, that's true.
So in AI application, yes, many companies are in the startup stage, not the IPO yet, but there are too many competition. So it's actually difficult for us to think about how to invest in AI application. But in the hardware side, if you have a strong belief on one day we will achieve the AGI and we need all this computing power, and you realize the hardware supplier, semiconductor, there are only a few players in the market. And some of the players, like for example, Nvidia, TSMC, dominated the market. Then for public investor, this is actually a very defensive approach to do the investment.
Okay. So the previous question is about startup. So we go to public markets, secondary market right now. So if we go to secondary markets, what will be your strategy specific focus on? Like hardware, software so far, or I don't know, like which side or which? I know, based on SEC's rule, you cannot recommend like specific company, but give us a more like idea or a trend or a landscape, like which one we should more focus on in the public markets. Which one you gonna go first?
Okay, let me go first.
Okay.
By SEC rule, I cannot comment on individual stocks, but I can show my opinion on country. So Taiwan strong buy for sure. So from time allocation in terms of research, in the next 2 to 3 years, I would closely follow TSMC's CoWoS capacity. CoWoS is chips on wafer on substrate. Because all these AI chips need to use a CoWoS technology to combine the chips and the HBM and then maybe do the 3D packaging. So TSMC is the only CoWoS packaging service provider in the world. And then we need to understand how much they are going to increase the capacity and how much of the capacity will allocate to Nvidia, to AMD, Intel, or Google's TPU. That's the first. And second, I think next year, in 1 to 2 years, networking will become very important. Not only the back end to connect all the AI chips to form a cluster to do the parallel computing, but also the front end networking. When we want to have more application in this LLM after the training, we need a faster front end networking to do all this inferencing. So the companies like Broadcom, Arista, and maybe some other transceiver players. I think this will be highly possible, will be the spotlight going forward.
Okay, cool.
Yeah, OceanIQ Capital, we're also SEC regulated, so we also
You can, okay.
cannot comment on public positions, but just generally speaking, from a market cap weighted perspective, the largest cap tech companies in the world are heavy in investors' portfolios. On the private side, we do see that the IPO market has been closed for 2 to 3 years now, and it's also a startup winter. It's a very difficult time in general for startups to raise capital and to also go public. So we also see some opportunity in these later stage startups that are more primed to go public when the IPO window opens up.
Okay, cool. So I think probably the last question is more about hardware, because most you guys are really focused on hardware. But I have separate question because you are one's hedge fund, the other is VC/family office. My first question for Owens, for the hardware, you mentioned about the Apple supply chain. I mean, if this is the iPhone time right now, the iPhone supply chain or focus on iPhone, Apple is good. So if we go back to more detail, I know you cannot comment or recommend any like specific company, but like which supply chain should we more focus on for in the public markets? This is the first question for Owens, and my question for Kai is more about stock. Because you mentioned about edge AI, and I totally agree. Edge AI or robotics probably is a very good segment we should focus on. So could you please tell us more about like edge AI, for example? Is this about automation? Is this about manufacturing? Or what is your idea about these segments? So, okay.
For sure, Nvidia supply chain, right?
Because this is iPhone time.
For individual investor, the easy way to follow Nvidia supply chain, you don't have access to all the sales side report to know who are the winner in the supply chain, but you can watch the news. When Jensen Huang visited Taiwan, which CEO participated dinner with Jensen Huang. Right? That's the Nvidia supply chain, right? And if some company, the OEM company cannot participate the Jensen Huang's dinner, maybe they have a news announcement say, oh, maybe we made some wrong strategy before, and we will work hard to participate in dinner next year, right? So this is an easy way to follow the supply chain. And I will mention that again. I think in the AI chips competition, NVIDIA's position is very dominant. But in the networking field, NVIDIA is trying to compete with Broadcom Tomahawk chips. And I think this battlefield will be very interesting next year. When NVIDIA launch Spectrum X 800G switch this year, and they are gaining market share in the enterprise solution because NVIDIA can provide the entire total solution of a data center to enterprise. Then you will see the dominant position of Broadcom Tomahawk over 10, 15 years. First time they have a competitor and a strong competitor, which is NVIDIA.
Okay, thank you.
Yeah, on the OceanIQ side, we invested in two AI camera companies. Basically, they allow these security cameras that we see everywhere to have AI intelligence kind of at the device level without going to the cloud, to the cloud, because it takes so much bandwidth when you send video images to the cloud to do computing. It's much better to do it at the edge. These two startups use different companies' chips. So I think one of them uses Qualcomm's chip with a strategic partnership with Qualcomm. The other one uses MediaTek's chip. So I think from a large company, public company perspective, these two companies are the leaders in edge AI.
Cool, thank you. So I still have some minutes. So I would like to ask some more like career question, because some of us, some of the talent attendee over here is young engineer or MBA students or so it's young generation. So a lot of them, they are interested about investments. So last two questions about your suggestion, if they are interested about either hedge fund, either wealth management, either venture capital, what can they do right now if they want to being an investor?
To be an investor in the public market, first you need to open an account, right?
That's very good one and real one, yeah.
And yeah, but this is actually
you should show the QR code.
When I interview MBA students, do you have a personal account? And what is your investment? And why you make this investment in your personal account? This is a very basic for buy-side recruiting. But actually, certain percentage of MBA students, they don't have personal account. And they cannot answer this question. Yeah, I would say most of individual investors, they have some strange behavior when they do public investment, which is, for example, if your annual income is 200,000, 300,000 a year, and you make your investment decision 200, 300,000 in less than 5 minutes. That's weird.
Okay.
Because you work so hard to make all this money, and you only want to spend less than 5 minutes to make an investment decision. And then maybe you just watch CNBC News, Bloomberg News, and another hedge fund guy super excited on something like Tesla, and you buy, you follow me, right? Ideally, you spend 15 hours per week and maybe over 2,000 hours per year to make that money. At least you need to spend 10% of the working hour to analyze the investment you want to do. For example, if you want to invest in a stock, maybe you need to spend at least 10 to 20 hours to do all this research. So if something happened, for example, stock market crash, August the 5th, the second Black Monday. If that happened, and you have enough research and the belief on your investment, and that actually is a good time to buy more. So be a contrarian to participate in the market, invest in a bear market in the bottom. The critical is how much research, how much study did you have?
Okay, thank you. Kai.
Yeah, in terms of career into investments, I see kind of two tracks. So one is on the asset management, wealth management side, and the traditional track is to join a Wall Street firm, and then as an analyst, and then spend a few years before moving into private equity or venture capital. So I started my career at Goldman Sachs, and then I moved to Credit Suisse. And then I think on the venture capital side, it's much more diverse. So I think I've seen the entrepreneurs that turn VCs. I think that's probably the most common track.
Yeah.
So people started companies before they can raise capital from LPs and deploy capital.
Okay, cool. Well, I think it's about the time. So our section is great because I actually, during our pre-conversation, I actually have to do a lot of homework about the public market and you guys' background. And your background is very, very different. So it's show different kind of strategy in the future AI investment. So thank you, Kai and Owens, and thank you for your attendee. And if you have any question, feel free to email to the organizer, and we will try to forward some of the question if they have any question or forward to you. Thank you. Thank you so much.
Thank you.